Hi, it's Steve Judkins with Keller right here in South Jordan, Utah. Hey, welcome to 2019. We're finally here, right? Hey, I just want to talk a little bit about what we can expect from the real estate market. A couple things in 2019. Number one are the interest rates and what we expect them to do. And then number two is what's going to happen as far as appreciation goes with the homes typically in Salt Lake County. So first, I want to talk a little bit about interest rates and what we expect them to do. Right now, we're sitting right around 4.5% for a 30-year conventional mortgage. We're looking at, or the economists are saying, that we're probably going to see somewhere around 5.5% by year's end. Now, what does that mean to the average homeowner? The typical median price for a home in Salt Lake County is right around $350,000. So we're going to use that number for a mortgage to do our calculations right now, just real quick, just so I can give you an idea of what that means. So right now, at 4.5%, $350,000 loan is going to cost you $1,773 a month for principal and interest. That's not including taxes and insurance because those vary with the property. Now, let's assume that the interest rates jump up 1 point and they go to 5.5%, which most people think that they will. That same $350,000 is now going to cost you $1,987 a month just for principal and interest. Now that is a $214 a month difference simply because the interest rates jumped up 1 point. Same property, same price, same mortgage. It's just $214 a month because the interest rates jumped. Second thing I want to talk about is the appreciation. Now, the appreciation has been in double digits for the past few years here in Salt Lake. I mean, we've seen exploding growth all over the place. That's not really happening anymore. We're starting to see the crest now, and we're starting to see things kind of flatten out, which is good. It's good for the real estate market. It's just we're not going to be seeing the multiple offers, and we might see a little bit more days on market, stuff like that. So the average price being $350,000, we're looking at about a 4% increase this year, which is going to bring the median price up to just under $365,000 for 2020 as we enter 2020. At least that's the predictions. Okay, so let's tie those both in together. If we're looking at rising interest rates and we're looking at rising appreciation, what does that mean if you're going to buy a house in 2019? This is the scenario. The $350,000 mortgage that you qualify now at $1,773, if nothing changes, your job stays the same, your credit rating stays the same, and you qualify for that number, that monthly payment, if it goes up 1%, you're now going to qualify for $312,000, not the $350,000 anymore because of that 1% jump. So things all stay the same. You qualify for $350,000 today, you're qualifying for $312,000 at the end of the year. Now, that's not all, because we're looking at appreciation of properties now too. That $312,000 property today is worth more. It's worth 4% more at the end of the year, right? So the $300,000 house now is going to be worth $312,000 based on 4% appreciation. So this is the big picture now, okay? If rates jump 1%, not only is it $214,000 or $214 a month more, that the houses that you're looking at now that are $300,000 and $350,000, and there's a huge difference in them. The $350,000 is out of the price range now; they're out of the picture, okay? Because the rates went up 1%, and the $300,000 house now is at the $312,000 mark a year from now. So that's the house that you're going to be looking for. All right, so I know the numbers have been very confusing, and I get that. So if there's anything I can do, if you have any questions regarding what I just talked about, you want answers on anything real estate related, please just give me a call, text me, email me. I would love to talk with you about them. Again, Steve Judkins with Keller, and happy 2019.